My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. To my friends, I'm just trying to make you a little money. My job, not just to entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. They're back. That's right. Mag 7, Bang, whatever you want to call it. And these big tech plays are demonstrating their staying power no matter what happens. They've got that kind of poltergeist 2 magic. This is the first of the 4 main weeks of earnings season. And these quarterly reports matter a great deal to you, to the stock market, to our portfolios. We know this moment is fraught with concern, especially after the market's remarkable run. You can see the tension when you add the average. They just kind of look like they're going to roll over. They snap back, they're going to roll over. But Dow ultimately finished up 201 points today. S&P gained 0.77%, and the Nasdaq jumped 0.87%. Nice move there. After all this sturm and drang over earnings, you might be wondering how the heck is it possible that the Magnificent Seven can somehow reassert their hold over the market? How can they keep coming back over and over and over again? So, at the risk of them suddenly rolling over tomorrow morning, making me look, let's say, ill-advised, I want to explain what's going on here as we begin the 3rd year of the current bull market. Of course, we're talking about Alphabet, Amazon, Apple, Meta, Microsoft, Netflix, Nvidia, and Tesla. I know Netflix doesn't belong in the Mag 7, but it was part of the original FANG that I traced out. And besides, I'm pretty sure I created that acronym on partial to Netflix. Plus, it reports on Thursday, and so it's front and center. That said, I don't want to minimize all the other groups that are rallying. Not when Wells Fargo, which we own for the Charitable Trust, reported a terrific quarter on Friday and is still going higher. Unlike previous Mag 7 rallies, this one's definitely not a zero-sum equation where the rest of the market does nothing. Other groups can work, too, in this market, perhaps because there's just a lot of money going around. And we know that there's a lot of money coming into the market because the Fed's cutting rates, and friendly cash isn't going to be worth as much as it was. But the staying power of the Magnificent Seven, I just call that truly unbelievable. Hey, why don't we start with the 2 stocks on my own them, don't trade them list. That's Apple and Nvidia. Today, 2 firms, JP Morgan and Evercore, talked about why you need to buy Apple. Both pieces stressed that maybe people have gotten too bearish on the stock ahead of the earnings, so we might need to rethink all that negativity and just buy the darn thing. I mean, it's bizarre that so many people are so eager to hate the stock of one of the greatest companies in history, especially when the stock's been such a great long-term performer. Quizzical, isn't it? Yet this happens whenever they launch a new phone. It feels like almost every day we come in and some analyst lowers their estimates because of tracker work that showed iPhone 16 lead times were short and there's not much demand, right? I mean, blah, blah, blah. So many analysts have now shaded down their estimates for Apple that, get this, if business is simply okay, the estimates will prove to be too low. So these 2 bold analysts at JP Morgan and Evercore wanted to take the other side of the trade, the positive side. Plus, many of the objections to Apple may not hold as much water as they did even a couple of weeks ago. For example, we know a lot of people were worried about Chinese demand, but get this, if the Chinese government's actually able to stimulate, right, the stimulus plan to start working, well, don't you think that China's issues are smaller concern? More money for consumers in China means more orders for the prestigious iPhone. This is why I always say own it, don't trade it. The analysts always try to scare you out of Apple based on incomplete data. And from a long-term perspective, think about it. They're always wrong. If you'll sit Apple in the most recent bout of negativity, you missed a tremendous run over the past week. And then you did it before that. You missed another run, then another and another one. No wonder they call this stock the Teflon Don, or at least Ben Reichus over at Melius, a big Apple supporter, calls it that, and I like it. Or how about Nvidia? All right, Nvidia, what can I say? By the jocular admission of CEO Jensen Huang, this company had its biggest miss ever in the last quarterly report. Now, initially, Nvidia got clubbed along with the whole market when the yen carry trade imploded. Then it came right back because that was only a temporary problem. Then Nvidia got smacked down after its quarter, although it didn't take out the blows from the previous sell-off. It's been working its way back ever since, as we learned that demand for its next-generation superchip Blackwell is, quote, insane. That's a technical term coined by Jensen, by the way. Next thing you know, the stock's coming all the way back. But back with very few people who sold the stock and, before this, right? I mean, they're long gone and gone at much lower levels because they traded it. They sold it. Again, take this as a reminder that if you trade Nvidia, you probably won't be able to sell it high and then get back in low. The ship would have left without you. It's too hard, people. It's just too hard. Now, those are the 2 I've sworn to hold, not trade. I don't feel the same way, candidly. about Alphabet. And in part, that's because the government has made it much harder to own it with this antitrust lawsuit that's aimed for a breakup, something I am very much opposed to. I'm also concerned about Alphabet's ability to keep putting up strong earnings. The company now has a less defensible position because it's become more of a media business, and that's a very competitive space. I do like that, boy, that Sunday ticket. Wasn't that great? Do you use the 4-box? I used the 4-box, and then I hit whichever game I wanted, and I kept coming back to that Cowboy game, the Cowboy game, the Cowboy game. Anyway, I'm an Eagle fan. Anyway, so the stocks come back hit, and I am so glad we own some for the Chapel Trust. We have an investing club conference on Wednesday. Hope you'll be there. We'll talk about it. Amazon's easy. It got hammered down from 187 to 161 after that last quarter, but it's back above 187 now. I think the company simply has too many levers, including the incredible growth in Amazon Web Services, which can take it back, I think, to its $200 high. Meta's off to the races again. Why not? Thanks to the success of Reels, the targeted ads on Instagram, WhatsApp, the Meta-loaded Ray-Bans, it's awfully hard to bet against this one, isn't it? Very easy to make the case for Meta. When you exclude the cash on the balance sheet, the stock is absurdly cheap. It's kind of strange how cheap it is. Microsoft's supposed to be hurt by weakening demand for its Copilot, with its Copilot being their AI assistant. I have no idea if there's a real weakness here, but there is chatter, and that's enough to send the stock down. That said, I think the bears need a lot more than chatter to keep it down. When Netflix reports on Thursday, you have to keep in mind that they haven't even begun to monetize their new ad tier yet. I think the de-risk the quarter because management can tell a good story about the future, which is what matters. Finally, there's Tesla. I know, Tesla up 7. Disappointing self-driving car event last week. While the Robotaxi shindig was definitely short on facts, at the end of the day, do you really want to bet against Elon Musk? I don't. I think the odds are good he'll figure this out. So even if you don't want to own it, you're taking your life in your hands if you try to short it. Here's the bottom line. Even if you miss these rebounds of the Magnificent Seven plus Netflix, don't sweat the program. We know these stocks will once again be hit by endless worries, giving you more opportunities to buy them on weakness before they snap right back and start climbing all over again. Let's go to Kyle, my home state, New Jersey. Kyle.
Jim, how you doing, buddy?
I'm doing well, Kyle. How about you?
I'm doing great, man. All right, I know that Uber's its daddy, but I would like to think that Lyft is at least worth double than where it's trading right now. What do you think?
I don't know, double, because the quarter wasn't that strong last time. I happen to love Dave Risher. I think he's doing a terrific job. It is a profitable company. I think that it could go to 16, 17. I don't want to say double because that's just a little too aggressive for me. But thank you for the call. Let's go to Jeff in New York. Jeff.
Hello, Mr. Cramer. This is Jeff from Sodus, New York, on the South Shore of Lake Ontario.
Wow. Holy cow. Let me get the map out. You had a map quest over there? How many, what is that? I walk there. If I walk, how quickly? Okay, go ahead. You ever hit the walk button? It's like it's always days. Yeah.
Yeah, Mr. Cramer, the air's cooler, the leaves are changing, and it's looking beautiful here in the Finger Lakes region right now.
Let's get at it. How about a field trip? What's happening? How can I help?
My kids have been back in school for over a month now, and I asked them about the shoes that they and their friends are wearing. It's always the same. Crocs. They love them. The U.S. consumer is doing well. The company has a new cheeky spokesmodel for their Hey Dudes brand. They just introduced a canine version of their shoes that are hilarious. But the stock isn't moving up. What am I missing?
You know, look, I wear my Eagles Crocs everywhere. I think the problem is this is a heavily shorted stock, 7% short position, and people are always leaning on the stock. They wear you down, and it's just what happens. I have to tell you, I think people always feel they're always one Croc away from getting crushed, and that's the problem. If you have the fortitude, you can own it. All right. The Magnificent Seven showed their staying power today, but if you've missed the moves on any of them, don't worry. You'll get another chance to buy when they get it again on the endless worries that everybody sows on Mad Tonight. Micron soared after earnings a few weeks ago, and with the stock continuing to climb higher, did investors miss the move, or is there still more room to run? I'm sitting down with the CEO. Then earnings season kicked off on Friday with the big banks, and I'm running through the reports and giving you my take on the numbers. And Adobe is hosting its Max conference, highlighting new generative AI tools in the creative space. And I'm hearing all about the latest for the company's top brass. So stay with Cramer.
Don't Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.